All right, now to our next conversation. We see stakeholders and the international community have been listing out what the next president of Nigeria must do regarding taxes. They've said that we need to raise taxes even more to be able to meet up with world best practice. Join me now is Mr. Michael Ango, partner and head tax advisory and regulatory services at Anderson, Nigeria. Good morning. Great to have you.
Good morning. Thank you. Happy to be here.
So we saw the British High Commissioner there telling us that the next CEO of Nigeria must raise taxes to meet up with the world best practice there. We say we have the lowest tax ratio in the modern world. How are you seeing this?
Well, it's not a hard or fast rule. There are many options, one of which, of course, is to raise taxes. There are other options, of course, to be more efficient in terms of government expenditure and utilizing what you have. But certainly, any fiscal policy plan for an incoming government will have to factor in how to raise revenue from taxes. And in this regard, I would say that one of the options that will be on the table is to see what the tax landscape in Nigeria is, particularly with respect to how we've been able to utilize our tax system in the last few years to raise revenue. Incidentally, the tax revenue collection in Nigeria has increased in the last few years. I think the latest figures out of the FIRS were about 10 trillion for 2022. But having said that, in the same period, we've seen significant borrowing by government. So what that means is that, expenditures have increased probably faster than collection has been able to improve. So yes, there will be a conversation about raising taxes, but I think that there are other options and that raising taxes will not be or should not be the first consideration in this regard. There are other options to look at the Nigerian tax system as it is already, improve efficiency. There are taxes that are not being efficiently collected, as it were, that already exist. In fact, I would say that there might even be opportunity to reduce tax rates in some instances. So, for example, one of the conversations that may come into play is reduce our common income tax rates and increase our value-added tax rates. Because again, if you're talking efficiency, you have to look at what taxes are easier to collect. Value-added tax and other consumption taxes are always easier to collect. So, in terms of even getting quick wins for government revenue, I would say that we'll be looking more at improving the collection of the taxes that we have now, rather than creating new taxes or necessarily increasing taxes, as it were.
And obviously, right now with the cash crunch, where we're seeing everybody, having to use, other banking and transaction channels to facilitate the transactions, is this going to play into, how the tax authorities are able to, collect tax, going forward? Are they going to be able to see everything that's happening right now with everyone not able to trade with cash that much?
Well, I have an unpopular opinion, and you may not like it, but I think that the first, as it were, cashless policy would actually help tax authorities. Because if you look at the fact that most people have had to migrate into online channels, and try to use whether it's POS, electronic transfers, it simply means that a lot of the transactions that were previously being done on a cash basis are now being done electronically. And what that means is that there's a trail, so we can track transactions, amounts of money that move around in the economy are easier tracked. And so the relevant taxes or the applicable taxes on such transactions can be easier tracked. If I were to buy a car from you today and, I paid you cash, it could be a transaction that will disappear. But if I make payment through, an online channel, such a transaction can be more easily tracked. So I would say that opportunities indeed exist, for tax authorities to improve collections through use of, in terms of, the online and migrations to, online channels. On the flip side, people then say, look, when, we have a largely informal economy in Nigeria, and so if people are unable to buy and sell daily like they do, it then leads to a shrinking in the, activities in the economy, and so possibly a shrinking in the GDP size. So, this is a challenge, but I would say that from the perspective of the tax authorities, what they should be looking at is how do we then use this as an opportunity, and also even for the monetary policy, regulator, they should be thinking of how do we move more of our informal sector into the formal sector, also improve the efficiency of the use of whether it's the POS, the USSD codes, and all of that, so that more transactions go through the financial system, and then of course, we can track those transactions, and then of course, if there are taxes to be collected, those taxes can be collected.
And obviously, we're going to have a new president at some point now. How should the next CEO address the issue of raising taxes and tax compliance? And, obviously, raising taxes, that's a burden on the people at this point.
Well, I wish you could tell me who the new CEO is so I could call him and advise him directly. But the reality is that, there would be need, of course, to study what is on ground. And so, of course, that the elections will end in possibly February or March if there is a runoff. And then, of course, if the new CEO is sworn in July and May, I expect that, there would be a transition period where a proper, look at what the past or the outgone administration has left behind would be done. So I think for me, what I'll say is you need to appoint competent hands into the various, offices that superintend over fiscal policy in Nigeria. But more importantly, one of the things that need to be done is to do a holistic review of the current systems we have in place, whether it be our taxes, whether it be our policies, and then to fashion out something that will accommodate as many Nigerians as possible. Yes, our tax authorities, especially at the federal level, have done significant work in terms of automating tax operations. At the FIRS, very good work has been done with the introduction of things like the Tax Pro Max and all of that. But that is not enough. One of the important things that must be done is to ensure that there is a linkage between all the relevant, revenue collecting agencies, especially at the federal government, at the federal level. There is, at this moment, people work in silos. So you have the FIRS in one box, you probably have the NMPC in another box, you have maybe NIMASA and all the major revenue generating agencies not working together, as it were. So I think that's one of the major things that will have to be done. There has to be, coordination, proper coordination, and then there has to be consistency in policy making, consistency in policy implementation, and even in policy communication. So people have to understand what the new government wants to do and how it intends to do it, so that you can get public buy-in. And of course, there has to be, collaboration with, professional bodies, the CITN, ICANN, and other relevant bodies. And then we must not be shy to seek for technical support outside Nigeria, if it were IMF, the World Bank, and it were, and the others as it were. So I think that there's a lot of opportunity for the incoming government, and we are all excited to see what will come.
Right. A lot of opportunity and a lot of work to do for the next government. Thank you so much, Mr. Michael Ango, Partner, Head Tax Advisory Regulatory Services at Anderson. Thank you so much.
Thank you. A pleasure.